Welcome, everyone. It is Monday morning. A lot going on in the world, a lot to digest after last week, a lot of things to talk about, our database, much more. We just are witnessed, I think Biden is talking right now. First thing he starts off with is some rhetoric about the elections after meeting with the Chinese for 3.5 hours, I guess. Anyway, what could go wrong there, right? Now they're sending Secretary of Defense over there, so interesting developments in the world, actually. So last week we saw a crazy week, right? S&P up 5.9%, NASDAQ up 8.1%. Russell up 4.6. We're starting the week right now. Futures are down a little bit. I'll go through the market grid and some other expectations here as we get going here this morning. But just there's still a ton of things going on, and we're seeing, Fed governors over in Australia talking over the weekend. They're keeping the rhetoric out there at all levels right now. So they've got everybody spread all around, to say the least here. A couple of things that I want to talk about before we get into the show today is, if you didn't see the video, I covered the market grid, but I also cover the database every day. And there's a pretty good explanation. I put a video out, and I'll make sure we get it into the description in today's video on how to understand the database, because there seems to be a lot of confusion. People think it's a lagging, and it's not. It's a very leading it's a looking forward view, not a lagging view. So watch that video. It's only about 7 minutes long. I think it's pretty quick, but it does give you a pretty good explanation of things. So let's take a look around, see what's going on right now from the standpoint of the markets here. We're looking at right now E-minis down 15 handles. They're pressing them a little bit here. We got about 10 minutes to go to the open. NASDAQ down 0.68, down 79. And we're looking at RTY down 0.5% as well. Meanwhile, we're finally got the Treasury market open. It was closed on Friday. We're up at 387, so a little bit comeback. I do expect to see us get back in that 390 handle. I'll cover that here just shortly. As far as anything else going on, not a lot. We are seeing a little bit of stability in Bitcoin, and I'll talk about this FTX situation. I was actually on a Twitter Spaces last night, right as I was trying to shut down for the night, and I did not want to get off the Spaces. It was an amazing conversation that was going on, and I really wanted to stay up, but I just couldn't do that and be here right now in any kind of good shape. So I went ahead and shut down, but there were 11,000 people on this space. It was pretty amazing, actually. It was some really good people talking on there that seemed to know what is going on here. Let's go ahead and let's get over and let's go to a different view here and see if I can get us over here and take a look at the market grid as we come into today. This is the daily. So let me bring up the data window so you can see this. This is, I'll go through daily and weekly since it's Monday, and we should be able to get this all done before the opening here. Right now, what we're looking at is R1 is 40.30. We've had a 96.50 high. That's 39.96. S1 is 39.70. We've basically printed an S1. I don't think we see an S2 value, but as always, if we print through this 70 level, the next level is 39.37. My expectation is that we should see some potential. You'll see here in a few minutes on a weekly, we're probably going to have a flat week. We did get an RTX sell signal on a weekly basis. That typically will suggest a sideways movement for a week or so with a slight bias to the downside. I'll set that up when we get into the technicals. But this is the ranges, so make sure you mark down these numbers. But it looks like probably S1, R1, probably a reasonably quiet day. There's no news coming out today. There are, which I'll go through here shortly, there are quite a bit of earnings still coming out this week. There's some substantial news. We have PPI coming out on Tuesday. So let's go ahead and take a quick look at the weekly grid for the S&P here. We're looking at right now the S1 is 39.46, R1 40.54. Typically, after an RTX sell signal, what you're going to get is usually an S1. S2 would be a lot. That's down in a 38 handle. Don't see that happening. So looking for around a 39.50 low for this week. On the upside, 54 is R1. The next level on the weekly is 4100, which goes up to some numbers I'll talk about here in the technicals here in just a couple minutes. Let's go ahead and we'll go backwards here. We'll go top down. On the NASDAQ, we're looking at R1, 12,078. Last trade, 11,764. S1, 11,618. Probably R1, S1. I'll update that as we go through the week. I'll back this up to a daily chart so you can get those numbers. Daily numbers here on the on this. Let me just get off screen here. Daily numbers are on the NASDAQ. S1, 11,728. So we've been almost down to an S1, R1, 11,967, R2, 12,101, and S2, 11,594. So looking for really kind of a quiet day, S1, R1. Not sure we're going to get any big stimulus to come out of any form here. Finally, we'll get through the RTY. Start with the daily RTY. S1, 1870, last 1875, low so far 1873. So basically S1's printing there, R1's 1903, the high so far today 1886. So I would look for more of this movement. And I'll go through the analysis here in a few minutes, but there are some things that what the algos are looking like and setting that up as well. So just coming back up for a couple of minutes before the open, we'll get set up and get over on level 2. We'll watch the market open and the action here for the first 4 or 5 minutes, and we'll get into what the algos are looking like, and I'll talk a little bit more on what I see the setup for the week with news, and there's quite a bit to talk about here on Monday morning. But markets are pretty stable here, down just a little bit, especially after that huge week that we had last week. So some of the patterns that are starting to set up here are starting to look a bit interesting. I'll go through our database here in just a couple of minutes as well. And, we're seeing some traction across there. A lot of things are hitting on some really good notes right now. So I'm expecting to see the sideways configuration actually evolve into more upside in this market. And I don't see a lot of downside. I will just discuss, let's see, we've got about 2 or 3 minutes. So let's talk about this FTX situation just for a minute. I certainly not I would say an expert on this at all. Like I said, I was on this very interesting spaces and what they're talking about. And the contagion that I'm talking about is through the crypto exchanges initially. But we've got some crazy people putting that you would normally respect, having good fiduciary processes to make investments, throwing money into junk. And we're seeing a lot of irresponsibility. Toronto teachers, they're advertised all the time on Bloomberg, and like they are, and the same thing with CalPERS, which is the California Teachers Union. Like they know what's going on. They threw a bunch of money in here with Sam, and they're not having a lot of fun right now. But the real question is, does this contagion go on, and what does it mean for a lot of things? From this, not only is the cryptos being having influence on what's going on there and what's going on with FTX, but we're also seeing there's potential bleeding over into some of these brokerage firms that also had invested money. It's amazing anymore that somebody thinks you got the whiz kid that's going to change the world, going to be the next Rockefeller, and goes from billions to zero in a couple days. And it's just a funny world we live in, because there used to be a lot of really good standards around financial stuff, and we've seen leverage really take big tolls in, especially in the crypto space. And now with these centralized exchanges all under scrutiny, and there's other things going on as well, because even if you're doing cold storage and things like that, there is implications that you're going to have to be able to prove where you got these coins, and there's all kinds of stuff. IRS is attacking crypto from every angle. They're just going on and on, trying to capture everything you can. You have to remember the government's got $32 trillion in debt. They need every dime they can find. So there's a lot going on there. So we are really close to the open here. Let's flop this over and get to and get to a different view. All right, we're on the level 2 here. They're pressing them down a little bit into the open. See what kind of action we get. Should be any second. There we go. Okay, so we're off. So as always, we pay attention to this volume bar here. It was interesting. The minute before, we started to see some spikes in volume already. And we're down 18 handles, down 0.5%. Like I said, after last week, S&P up 5.9. There's not a lot to worry about with this little bit of downside of any sort. Although we did get, I believe we got RTX sells on the daily and the weekly, and that's going to have some impact. So we're getting a little bit of a bid coming back in here. Really just kind of a stable opening at the moment. So we'll continue. Hang out here for just a minute. We'll go ahead and go through a typical Monday kind of review as we go forward, folks. We'll take a look at the database. I'll go to the database first, and then we'll talk a little bit more about the backdrop on the economics coming out. There is a fair amount there because we have PPI coming out tomorrow, and the question is, could that report just basically reverse? I saw some Fed talk there that hey, it was just one report. Don't go getting excited about it. Markets got really excited. So we're seeing a bid come back in here, printing up to 88. We're really getting that. Here you can see that volume spike over here where my cursor is, and so we're seeing a little bit of stability here. I don't, like I said, I see a very narrow range for today. We'll go through the algos here in a minute before we get into some of these other things. And in fact, since we'll watch one more minute, about a minute and a half more of this screen just to see how things start to stabilize. We're printing up to 88. The market grid just got an RTX sell signal on a 1 minute. We should see maybe some consolidation at these levels here and see what starts to get some kind of semblance of normalcy once we get the market stabilized. It takes actually about the better part of 20 to 30 minutes to get all of the market into kind of a normalization after the start as all the players show up. So we're still seeing a bit of a bid coming in here. We're trading up to 90 now. 91 is printing. So we're still getting, staying within the market grid projections, but we're definitely getting some volatility. One real quick comment is the order book is very thin right now. That's why you're seeing on the far right above where I'm at, the erratic action of the market book is jumping around like it is just because there's no liquidity. There's 10, 11 contracts on a price. So we just watched the print to 91 and back to 87 in about 30 seconds. So we saw a 4-handle move. So you can see we're starting to back into this market grid number here, back to 86. So we should just see some stabilization there from that standpoint. All right, let's go ahead and let's move on here, and let's go over and take a look at some of the algos. I'll start with the hourly here, and this is the hourly S&P. Let me move this down a little bit. What's interesting about this is it's saying that we're going to be pretty stable here for the next 2 to 3 hours anyway. A little bit of downside, but very little. I'm going to change the scale just so we can see this just a little bit. But we do have some fib projection right now for a move to 40.22, 40.39 on the hourly. And we're not getting any indications off of this action at all what's likely to happen. Let's go to the NASDAQ just get a look there, see if there's anything coming there. NASDAQ has really some negative patterns setting up here. It's interesting that S&P has some upward projections, downward projections on the NASDAQ right now, and we're looking at NASDAQ looks like it could come under pressure, and 11,608, this hourly graph, but again, is fib target 1 right now. There's really not much out there, and we're trying to trade through the 40-period moving average on the hourly. Let's do an RTX. Let me jump over to this other screen here very quick. Sorry about that. Yeah, the RTY is down 0.77 right now, and we look at that. The algos are just like on the S&P. They're also a little negative here, and we've got some downward projections setting up on the Russell. So Russell and the NASDAQ look like there's some downward pressure coming. As I mentioned, we have RTX sells daily and weekly on the S&P, NASDAQ, and I'm not sure when we go through the technicals, I'll update that on the other patterns. So let's go ahead and just keep the flow going here. The plan is for the day is we're going to go all the way through all of the markets, just straight through, and I'll back up and we'll go and talk about the some of the earnings and things like that in the second part of the show this morning. So let's go ahead and go over and take a look at the database. All right, we'll start off with the daily, and it's interesting. We had 1,435 buy signals, 145 sells. We're looking at 76.72% bullish. This number jumped a lot more than I thought. Typically, we get up to about 68, 72. Have seen, as I've discussed before, we have seen it get up to a much higher number. This just suggests that we're likely to see more of a rotation and extension of what's going on here. If we just look at basic materials just came on, but if you look at some of the returns here, energy is the big player right now, up 16% on the, as we look at these sectors here. The second one is transportation's had a pretty good run. Third is capital goods. So we're seeing quite a bit of rotation, and there's even a strong mix of the sectors as they come in. We just recently got a bid in the tech sector from that level, and there's quite a few stocks. All of these represent roughly 15,900. We'll call it 16,000 stocks are tied up in these indexes here, and they're all right now. All 12 of the sectors are long. Of the industry groups, the breakdown, there's 102 of them. There's 85. So let's go over to the weekly view. And weekly has moved up from about 18% up to 31.91. This is pretty impressive. On the weekly trades, we got 4,766 buy signals, 145 sells. So this is a pretty strong rotation, and I did discuss that I thought this was a strong possibility that we would get a good rotation on the intermediate. So this is a pretty good showing. And if, like I said, I mentioned in this video, I went through how this database works and how to look at it and what it means. And we're still below the key metric on the intermediate. We need to get up above 42%, but make sure, like I said, we'll make sure that gets into the description of this video. I also posted it on Twitter. So if you go on my Twitter feed, it's Twitter/expert, no E in expert, just XPERT. And you can see that video there. I think you'll find that interesting because a lot of folks, when I talk about this, I want you to understand the forward-looking part of the database, because that's really the important part. It's not just reacting to today's sales. Oh, we got a bunch of buys today. It actually has some of the stats. There's a page we have in Wavetech that brings up all stats, and it gives every one of our symbols in our database has a map. So everything has a probability map. It has a percent accuracy, all kinds of metrics about how the models work. And then we take this to the next level on a universe level and take a look at this. So it's very significant, and hopefully you'll get a chance to watch that video. I was going to play it today. I just didn't want to spend the time here to do that during market hours. Okay, so let's go on, and let's before we come back and go through the market technicals, I just want to go through, and I do want to talk about the some of the economic reports that are coming out this week, and we'll do that right now. Then we'll get through all the technicals. So we have on Tuesday PPI coming out, expected up 0.4. Maybe that number is going to come in a little hotter as we get closer. We're weeks away, but as we get closer to that December Fed meeting, we'll have the PCE numbers coming out again. And it seems to be there's a growing consensus that that number is going to be hotter than everyone thinks. So we're a long ways out. I covered this scenario on the CPI numbers last week, and I'm going to start to focus. I did some work this weekend on these economics numbers and running algos and stuff on them using the PPMs, and I'm encouraged. I still have some research to do. I unveiled some of that to you the other day, but it does look like maybe unemployment's going to get up to maybe between 4.3 and 4.5%. So it's not a big deal, but it looks like there's going to be somewhat of a cap. So the general scenario around just about all of this stuff right now is that we're going to get a mild recession, blah, blah, blah. That's the way that's set up. On Wednesday, we get retail sales. That'll be an interesting number. It's expected 0.6. And then we have industrial production coming out. Not a big number, but it's expected to be up just a little bit. Probably the better number is capacity of utilization at 80.3. And one of my mentors back in the old days, he used to say it's very hard to get that number much over about 82%. And I know we've seen numbers over the last several years like that, but there's some issues going on right now that are, I think, unresolved with productivity and some other things that are probably going to affect the capacity utilization. And we'll find out if it really has any immediate meaning. I don't think anyone is going to be sitting here and reacting to this number. It's a slow-moving number, but it's one of those numbers that you watch and try to figure out what it really means when it comes to productivity and production in general. So folks will be watching that on that's Wednesday. Thursday we get housing sales. I believe existing housing. No, it is housing sales. 1.4 million, permits at 1.5. Just rounding numbers. We get claims coming out at 230. The number to watch this week, in my opinion, is going to be the continuing claims. It's back to 1.495. If that starts to get over 1.5, we could see some acceleration. And I think that's what the Fed is trying to get to, where they want to see some deterioration in the labor market. they're really not getting that. So we're going to have to watch that number fairly closely. On Friday, then we get existing home sales, 4.3 million, and leading economic indicators, which nobody cares at all. That used to be a well-watched number. No one really cares anymore about that. And so that backdrop with the fundamentals is, I think, important to understand from the standpoint of what we're going to see out of PPI. Maybe that reverses. Maybe that's a number that sets us more in this sideways zone after RTX number. We'll just go through every week. I'll be here every morning this week, and looking forward to just unfolding tomorrow. Just a quick comment. Tomorrow we'll be actually covering some stocks. I'm not sure what I'm going to cover. Last week we did some of the energy stocks. I'm working on the list of stocks that I'd like to cover just from what's going on within the rotation, within the database, see if I can find some things that can be featured, because we've had a ton of buy signals in our database. If we go back on a short-term basis now, we got 76% of the database is long right now. We got almost 32% of the intermediate. So I think all of this is going to continue to evolve, and it's kind of looking like a year-end rally. Maybe Santa Claus is coming. All that kind of stuff is out there. So let's go ahead and get into the technicals for today. Okay, first up is the S&P. It is kind of interesting. It looks like the next day or so we have kind of a flat market, and the algos are suggesting we're still in this uptrend. And as I mentioned before, we put a trade on at the 37.71 level several weeks ago. We can go back and look at that trade, but it is still long and still has expectations of the markets going higher. We're looking at these dots above the market. These are the fib projections. Minimum projection 4130. There's a whole lot of numbers here that are starting to set up toward this 4130 level. And I'm just going to go over here, and this is the weekly chart I'm just bumped over to on the S&P on the futures, and we're looking at fib target 1, 4190 on the daily. We're looking at 4130, 4190, and we should start to see some improvement. As you know, we got the RTX sell on Friday, so it does suggest we could consolidate for a week or two. And just looking at the market grid on the weekly, we're looking more at the R2 is 41.14, R1's 40.53. So this will be the setup, folks. Watch for a penetration of that 40.53 level. If we get above that, then we're likely to move up to at least the R2 level. I don't see hitting R3. I think we're going to probably peak out around at least this first fib target here on the weeklies. And what's interesting is the algos on the PPM1 are suggesting we should improve. Meanwhile, we're not getting any big movement here on the PPM2. So that says that the 21-week moving average is going to stabilize here. It's currently at 39.19, so probably 39.20, 38.80 is going to be major support levels in this range. Just looking at the market grid here on the weekly, the level below R1 is, let me just get this number here. S1 is 39.46, and then below that is 38.86. So we could see some volatility, especially with PPI and some of these numbers I have coming out. Probably PPI is the big report that we'll have, and we'll get that out of the way early tomorrow. All right, next we'll go to the NASDAQ, starting with the weekly chart. This is interesting because it says this is probably going to be, at least on a short-term basis, we're looking at the PPM 1 is downticking right now. The algo is suggesting it's going to improve, but it's still going to be negative for another week or two, which suggests that the 10-period moving average 12,011. So we'll just call it 12,000. Around that level is going to be pretty substantial resistance. On the downside, we could see move down 11,360, something like that. We could get sandwiched between the 10 and 21 here. The 21-period moving average, interesting enough, does not, this is weekly chart here now, folks, does not look like it wants to turn up, which suggests that we could get into a very choppy range here as we come into the second half of this month and maybe start to consolidate before the big Fed meeting. And this may be the case on all of these indexes. Let's go ahead and let's go to the daily chart here. And the daily has is suggesting really more of the same, the sideways. We look at the fib target 1, 11,885. We basically have satisfied that. We're just short of that level. On the second level, getting up toward the 200-day moving average, 12,362. The 200-day right now is 12,548. I've been talking about all of these indexes working toward that level. Fibonacci targets suggest that's still very possible. The PPMs, however, we are starting to see PPM 3 turn up. So in general, we're going to have major support around the, right now, I'm going to call it 11, get the exact number here, 11,200 is major support, probably coming down into the market grid numbers here. S1, 11,728, 11,560, 594 is the S2 on the daily. So I just see us staying within a range here today. And like I said, we should see a continuation of just kind of a sideways range for a few days. All right, let's go to the RT. We'll look at RTY, the futures on the Russell. And like I said, we got this RTX sell the other day. Now, we did manage to get a little higher bid on Friday, but now we're looking at it coming back in. We're above the 200. The 200 right now is 1858. We're trading right now 1871, just above that level. The algos are very neutral to down on PPM 1 and 2. PPM 3 is way down here. This is the value that it's representing down at 1761. It's starting to turn up. It's not really in play. So this is starting to look like we're going to get quite a bit of a messy, kind of choppy market in here. And I think this will be probably throughout this week. Like I said, the PPI numbers could throw everything backwards if they come in hotter than expected or some kind of surprise there. And I'm wondering actually if the Fed isn't actually saying that. That's why they have the talking heads out. I forget this guy that was in Australia, his name. But the bottom line is that he's really looking at the kind of keeping the dialogue that, you know, they're going to keep the rates going up, and it was just one report. And so listen, these guys know all the numbers already. They've known the PPI numbers for weeks. They knew the CPI number when they were doing the Fed conference. And these are numbers that are released to us, but they already have the benefit of all these numbers. So there's, you know, whether there's leaks and other things that go on. Sometimes that appears to happen, but for the most part, there isn't a number that we see. It's not like they're surprised that PPI is going to come out at whatever it comes out at tomorrow. They already know the number. And so their operations, their rhetoric that they're talking about, they're trying to neutralize and jawbone everything from that standpoint. All right, so let's go to the treasuries. A few things I want to talk about on this today. We'll be jumping around a little bit here on this one. But I'm looking at the algos are continuing to suggest that we're going to see more downside. The fib projections for yields right now are suggesting a min 380. We got down to the 381 level the other day and change. We're seeing a little bit of reprieve from that from that standpoint, but we're looking right now at a 387 last trade. But the algos are suggesting we're going to still be with a downward slope. So you have to wonder how the Fed's thinking about like this. This is not what they want. Here they are trying to raise rates, and yields are coming down on the back end of the curve. And I think a lot of this, I think maybe this is being misinterpreted to a high level, in that what we're really seeing here is just that lack of demand. The housing market is off. I went through a number of markets, and there's some of the hot markets in the country. Their sales year over year are down like anywhere from 30 to 45%. I went through a number of markets on Redfin, just looking at stats the other day. And so that's really what's affecting the 10-year and some of the back end of the market is demand, and primarily housing and any type of real estate as far as that goes. There's, on the commercial side, especially apartments, there is no deals out there right now that will actually be able to be done with these current rate levels and make any sense and trying to make a profit out of them. And so we're really looking at, I think, the beginning of the real estate situation, especially if we continue to see yields just stay where they are. If they uptick any more, then it's going to be disastrous. So it's interesting. This week, as I mentioned, we have a number of housing numbers coming out. And I suspect that those numbers will continue to be pretty weak. I also noticed that I'm looking at my economic numbers here. There was a number I noticed. Yeah, it was the Empire State Manufacturing is expected to be down 7.5%. So areas of manufacturing, housing, that's where most of the weakness is showing up right now. And like I said, just to this is all related to the interest rates. Well, as we come into the week and we start to see any type of, we get into the claims and the employment situation, maybe we'll start to see some of that deterioration, and that will start to reflect some of these things. Right now, the layoffs that we've seen have been with the big major companies, the Apples and the Metas and so forth. We are seeing some layoffs in other areas. But meanwhile, these JOLT numbers keep staying really high, all of that. But back to the rates, I think this is why we're seeing the back end of the curve. And I haven't done it for a while, but I've talked to you and I've got my drawing board out to show you what my expectations were. And they're actually playing out as expected. The front end of the curve, Fed funds are now at 4%. I think they go a minimum of 4.5, and they could go to 5.25. That's kind of my projected range right now. And then, of course, I'm not showing you. There's currently no numbers here. Let's see here. These are daily. Yeah. So what I wanted to show you with this recent decline is up at top here. You see these green dots. Those were the numbers that I was talking about having projections. They were 468. You may remember these numbers: 468, 497, and 515. Well, this recent decline that we had just in the last couple of days with this, some of these numbers that have come out have blown that up. That calculation is no longer valid. We took out a key low, which was over here at the 395 level. When that was taken out, it blew up that calculation for that Fibonacci projection. So we are neutral right now. The only thing that is on the books for the moment when it comes to interest rates is just downward projections right now. And they are 380 min, 364, and 354, which is an insane number. The algos are suggesting that the PPMs are going to roll over across the board. And, we saw this on Bitcoin, folks. Those of you who watch the show every day, going back several weeks ago, I was telling you Bitcoin is being projected to have a complete collapse. And we'll go through that here shortly. But this is a similar type situation. I just want to move this over and go to a weekly chart. And the weekly is also showing massive movement down here, especially on PPM1. What that suggests is, that's why what this suggests when you see these negative numbers on the PPMs, that means that the only way that this algo is going to be right is that we have to start to trade below the 10-week moving average on the treasuries. So that number right now is 389, which we're doing. And the fib target 1 is right now at 3. This is a pretty crazy number I'm about to throw out. 3.37. Okay, that is the target. What these algos are suggesting across the board is that we're going to move down toward probably 360 and maybe a 350 number. I'm having a hard time believing this Fibonacci projection, but I'm just telling you, the algos are also predicting that the 10-period moving average is going to be declining into a trend mode down, which would suggest that we're going to challenge the 21-period moving average at 340. This is a weekly treasury chart. And this is kind of one of those things where it's pretty insane to think about, but that's what it is. And we're also, as we just went through the equities a few minutes ago, there's a positive upslope for multiple weeks coming into, I mentioned Santa Claus rally. A lot of things are lining up that we're going to continue to move higher in this pattern as we go forward. Our database at 76% on the daily. We're at 32% on the intermediate. It's possible if we just maintain sideways here, there's a lot of stocks. And remember, we have a lot of symbols in our database, 16,000 of them. And if we start to see just stability through the week, we go sideways like the RTXs are suggesting, all of that stuff, then what you're likely to see is that database could click up into that 42 handle. And like I said, we'll make sure we get that video in the description that I did over the weekend so you can understand what these numbers mean, because those are big forward-looking numbers, because in the buy signals that we got for today and are good for roughly 150 to 200 days forward. So it's not just some reaction to last week. These are new trends that have evolved, and the stats that we have used, this database has been around for over 2 decades, and it's got a lot of history, and I've studied every bit of it every day, every week for over even longer than that. And all I'm telling you is that very accurate. When it starts to get these rotations, there's momentum and a residual impact of hitting these numbers. It's very unusual, even in these crazy volatility times, that we see things roll over. So what I'm trying to do here for you is to tie together a complete theme that is happening as we're seeing all of the stats. So I go through the flow of my normal presentation, and what I'm seeing here is exactly all of these things rolling over. Could we really print a 350 Treasury? I mean, that's what the algos are telling us. We have actually formed a downtrend. If you look at I'm going to expand this just a little bit. You'll see the market grid is all sloping down now. So we've got a channel forming in the market grid on a weekly basis. And matter of fact, if you just look at the market grid for this week, let me put that up there so we can see it. It's over on the far right-hand side. I know it's pretty small, but it is 372 is S1, S2 363, S3 353, and 345 is STX. So within the normal volatility of this market, those numbers are possible this week. Okay, not 3 months from now, not 3 weeks from now, this week. Typically what we'll probably see is S1 on this is 372. Even that's a big number down, right? We're printing 380. Can't see the last number. 387 right now. So easily an S1 this week would be 372 on a weekly. On the upside, R1 89. We're almost there at R1, and especially with these downward sloping numbers. Now, the only positive thing that is happening here as I go through this analysis on the 10-year, on a weekly, we still have a positive ppm at 1.43. So it's going to take about 2 to 3 weeks of probably a sideways range. S1 would be a big print here. That would be 72. And we've already printed, as I mentioned, we've already printed R1, which was 89.90. R2 is 399, would be back to 4%. So that's probably our range, S1, R1 this week. So keep that in mind. I am going to cover the Dow because I haven't covered that for a while. I think there's some significant things going on there. So let's go to the Dow next. Okay, so the Dow has been in a downtrend for a number of weeks. The algos are suggesting that we're going to continue to trade probably just above the 40 period moving average. That is currently at the 105 level. Last trade here, 106.98. There's a little bit more downside. We should stabilize down around here. So we're about as far as we're going to go. However, the ppm 2 and ppm 3, they're suggesting that we're going to see a rollover. Now, this is the weekly Dow chart, and they're projecting that we're going to see further downside for longer than you would think. And that would make sense if I'm right about the scenario in the treasuries, that we're going to see maybe the Dow weaken a little bit. Even though the front end of the curve's getting jacked up, like I said, going kind of really just kind of compiling everything in today's video as we get set up for this week is really taking a look at what the macro environment is that we're operating in. And if indeed we have generally downward sloping yields on the back end of the curve, and we have the Dow is likely to weaken, and I'm going to go and cover gold next, so we'll kind of put that together with some of the things that we're seeing in the gold market as well. So expect to see all of this stuff. The Dow probably stabilized not too far from where it's at right now, so I don't see a big collapse in the Dow, but it looks like all of this stuff is very connected right now, as it always is, and it looks like we're going to drive this a little further. In fact, I'm going to cover crude oil, and then I'll do gold. So let's go ahead and do crude now. So as I've been discussing, and like I said, last Tuesday we went through the XLE hack on that I did on our PortfolioXpert software. What we're seeing here is that crude oil is just going to continue sideways, and I've been arguing 82, 92. That's pretty much been the range. This weekly chart last week was 84.70, 93.70. 75, and I think we look at the grid for this week. 87 is S1. This is a weekly crude. 87, 85 is S2. We're looking at R1 90, 83, and R2 92, 92. So we're definitely just locked. The algos are suggesting that we're likely to see a little more strength coming back into the markets over the next couple of weeks. It's also, if the algo to be right, we're going to have to trade above the 10-period moving average on a weekly basis, which puts us at above 90.77. Let's go to a real short term. Let's go to a daily chart here. And we're seeing some downside projections here, but really more of a stable projection from this market. We're looking at the downward grid here, 88, 87, S1, S2. On the upside, 89, 98. So far, we've had a 89, 84, and a low 87. So pretty tight for today, but it does look like the general slope is just going to be in a very choppy range. We do have some fib targets to the downside. 81.40 is fib target 1, and that probably will set us up into some of those weekly areas that I just discussed. Next, we'll cover gold. I have to tell you, folks, the algos called this thing absolutely perfect. If you remember going back a few weeks ago, I was talking about, this is the daily chart, but look at this move up. It looks like we still have more of a higher level consolidation, possibly heading towards the 1800 level, the 200-day 1801. We've got Fibonacci old targets that were out here were for 1809, but it looks like we're heading for that, and we should test that 200. I think that's going to be pretty substantial resistance at that level. I don't expect to see that the market's going to just go flying through that. But let's take a look at the weekly, because this is where the big prediction came from, and I just want to make sure this. If we went back just a few weeks ago, I think it was 3 weeks ago, the algos were starting to predict exactly what's happening, that we're going to see the PPMs all turn up substantially, and that meant that we're going to have to get above these moving averages. I thought we'd trade into maybe this is the weekly, maybe the 1720, 1740. Well, we exceeded that, and now we're printing up here at 1775, the 40 period, which is similar to the 200-day on the 40-week moving average, is similar to 200-day, and you're looking at 1807 right now on that level, and we're above the 200-week, which was 1742. I thought that was going to be some resistance there. It was non-existent. We just traded right through that, and a lot of that had to do with the lower interest rates that happen. You think CPI came in cooler, gold would go down. They're obviously trading interest rates, and that's what's driving this thing from this standpoint right now. So it looks like the algos are, on a weekly basis, are going to continue with an upward bias. It does suggest that we're going to get to a 0.68 over the next couple of weeks on PPM1, which means that the 10-week moving average is going to turn up pretty substantially. So for an intermediate trader, all you're going to need to do is keep as long as we stay above that 10-week moving average, we're in pretty good shape. That number's way down at 1689, and it's hardly going up, but it's going to accelerate substantially over the next couple of weeks. So all of a sudden, 1770, 1720 is going to be major support underneath this market. All right, we'll do Bitcoin next, and then I'll come back on screen. I have a couple more things we can talk about before the end of the presentation today. And really this is probably the most interesting thing. I've been telling you folks about this chart for a number of weeks. Let me expand this. The PPMs are projecting a complete, I don't know how, there's no nice way to say this, a complete collapse in Bitcoin. And I've talked about this number down here at 9,800, but these algos have been projecting this. And I remember talking about this. We got the big down week last week. Maybe we get a little up print here, but the PPMs right now, PPM 1 is a minus 2.66, PPM 2 minus 1.00, 1.01, and then we're looking at PPM 3 is still positive up here, but all of these are going to turn down substantially. And this is a crazy number. If we just go out about 3 weeks from where we sit right now on the algo, it's suggesting we're going to have a minus 6 on the PPM 1. On PPM 2, it's going to be a minus 4, on PPM 3, a minus 2.7. So what it's suggesting, and I'm going to draw something in here because this is such a big event, and especially with everything's going on, you've got potential major Ponzi schemes with this FTX situation. Looks like they may have absconded with public money. Who knows? I heard they're running to Dubai. Who knows what's real right now on this whole situation? But the bottom line is this is what's being projected for prices. So I'm going to try to draw something in here that I think will be helpful. I just think this is something that we kind of need to address. So this right here, I put an arrow on it, is the 21 period moving average. Way up here is the 40, and the 10 period moving average is here. Now this is the weekly, and those values right now are 19,003. They're dropping substantially. And what I'm talking about happening here is this, and I'll bring up a different color so we can get this, is that this 10 period moving average is going to be going down like something like this. And the 21 is starting to roll as well. And we've got a big catch up, and nothing's going to happen. I'm going to try to put this scenario together until these longer averages at some stage, we're going to say that somewhere in a range, target range. Let's move this over. Target range somewhere down in here is where the Bitcoin is going to potentially stabilize, and that's what's being projected by based on these items that I have right here. Looking at these algos now, these are projected values. They'll probably moderate over the weeks to go, depending on what kind of range we get. But everything is going down, and they're already, if you look at the value, minus 2.21, and then PPM 1 right now at minus 2.67. So this is a substantial number, and this is probably where we're heading, some kind of target range. Depends on how long it takes. This is weekly, so we're looking at, maybe into January, February, just looking at enough of these bars to kind of set up here to move us down into this range. This is that right here is that 9,800 level. It's kind of where I drew the circle. It's kind of right in that range. So I think this is possible. I don't think it's going to zero. I'm not into that mode. I'm not into the Peter Schiff mode where, it's a complete scam or anything like that. I think Bitcoin's legit. It's just that there's a lot of leverage that seems to have shown up in this market, which is really probably the biggest issue here from what we're seeing right now at this time. All right, so I come back up here. We've got about 8 or 9 minutes to go. Just want to summarize, like I told you, I'm kind of buzzing. I'm really sad that I had to go to sleep last night because I think this crypto situation that we were seeing with the FTX, when we talk about getting any kind of contagion, something much bigger happening, it's certainly not being reflected in the markets. Markets have actually rallied pretty nicely. We're back over 4,000 here on the S&P. So I don't expect this to have a direct effect on the equity markets right now. I don't see that really coming into play. But in the crypto space, I think there's a lot of legitimate issues that are going on right now. And I'm not sure where the bottom is, mainly because there's a lot of fraud and other claims being made, whether they're true or not. I guess eventually we'll find out. But certainly when you see these centralized exchanges go down, and I would just say, be very careful in this space. It's very toxic right now. I know everybody was talking about a crypto winter. Well, it's gotten much worse than that. All right, so let's go back to the world of equities and everything that I talked about and just try to summarize what I see coming for this week. And I think, like I said, I think we really have a sideways choppy range coming for this week. There's still a residual buy here. We're looking at NASDAQ is still down, but S&P just went positive. We're trading 0.2 even right now as we speak, and we're just seeing the yields come back up a little bit. We're at 388 again, 389 right in that range on the 5-minute chart. That chart looks weird. I'm not sure what the settings were on this, but this is a 5-minute graph here on the. Let's put it over here. That way you'll see a little better view. So we got a 1-minute chart there of the Treasury, so you can see how they're trading back up towards the highs of the session. But just kind of doing a quick look around here as we finish this session for today. As we're seeing kind of a mixed picture. The dollar's up ticking again. So I don't know, maybe it's because Biden stopped speaking. Not sure here what goes on. But we're basically seeing everything trying to stabilize to a large degree. So I guess in summary, I'm just looking for a very choppy week. We have PPI coming out tomorrow. We'll be live shortly after the market when those results are out, so we'll be able to respond fairly timely to those numbers coming out. Let me look at a couple comments as we close down. We've just got about 6 minutes to go. See if there's anything out there. Yeah. So So anyway, I saw somebody made a comment. What are the PPMs? The PPMs stand for price, pressure, momentum. they measure the angle of attack of moving averages. They tell you probabilities about when a moving average is going to be a trend line, whether it's going to hold or if it's going to break down. So that's what those numbers tell. There's some things on the channel, understanding my process under the playlist, and you should be able to learn a fair amount about them there. So let's see here. Just a couple more, looking through a couple more comments here. So get rid of that troll that was hanging around. See you, brother. Anyway, yeah, folks, just to kind of comment. See, Bob is biased. I think we all are. I think you are. Who isn't? Who doesn't have a bias? You're not a human if you don't have a bias. Anyway, thanks for the comment. Appreciate it. But anyway, yeah. So I just want to thank everybody for coming. We're still working on this, getting this format tomorrow. Let's talk about tomorrow setup. So I will be coming up with some stocks on Tuesday. We have a segment after 1:30. I'll go through a segment. We'll talk about stocks, cover some individual stocks. I'll have a theme of some sort. And I still am working on a project that I think there's some interesting things that are going to happen. One of the conversations that, at least from what little I've read so far, that Xi Jinping and Biden were talking about is, all the competition and the whole onshoring, which basically is deglobalization. That whole conversation is going to continue. And I think at some level, those things will happen. And I will just tell you, part of what a scenario that I'm going to start painting on this channel anyway is talking about what that means and who's likely to benefit from that. The infrastructure money that they put together was a joke. It looks like some of the chip money and some of the other things out there, those are probably more likely to be used. I think the infrastructure money is just there. They're going to use it for whatever they want. So whether it will be actually infrastructure, we'll find out. Now that the elections are done and basically the configuration didn't change a lot, so we're kind of locked in the same place we have been from that standpoint. So anyway, but tomorrow we'll be covering some stocks. On Wednesday, I'm working on a project that could be very interesting for Wednesday's broadcast. Thursday is about commodities, and then Friday is just kind of winding down the week and seeing what kind of big trends that are out there. So anyway, folks, looks like we'll finish here, and we'll call it quits for the day. Appreciate everybody for showing up. Please comment if you'd like to see me do what you'd like to see me do. This format is evolving at the moment, so that is definitely, I'm open-minded to a lot of things. I've already taken some recommendations and some suggestions from you folks, so keep doing that. That's what makes me better. Make sure you subscribe, hit the like button, and we'll talk to you tomorrow at 9:15 a.m. See you then. Hey, Collection Services Corp. Send an email, info@Kendall Report. I'll watch for it. Send it now so I can take a look and catch it and see what's going on there. Thanks for your business. Appreciate it.